Hi, I'm Alexandra or Alex. I'm really excited to take you through this first time buyer presentation. So you should be able to see my screen now. And we're going to talk about buying your first home, what you need to know. So just a little bit about myself. Again, my name is Alex. I work mostly with first-time buyers and I love it. I think it's just a really exciting time in most people's life. And it's also a really big investment. It's the biggest investment a lot of people ever make. And it's a really exciting opportunity for me to be able to support you. And I also am an agent who loves questions. So it tends to be a really good fit. I've just asked me all your questions and I provide you with as little or as much information as you would like. I recently was a first time home buyer. About a year and a half ago, I purchased my first home. It was a whirlwind. I learned a lot being in the buyer's shoes. And so ever since then, I've been even more excited to continue to serve my clients with that firsthand knowledge. As a military brat, I've lived all over the United States, but the DMV is definitely my favorite, which is why I decided to purchase my first home here. And then I am a dog mom to the amazing Pepper Ann Peterson. She is currently resting peacefully, but we'll see if she stays that way for the duration of this presentation. So I am fortunate enough to work for City Chic Real Estate, and our motto is let's get smart about your future. We are radically transparent, helpful, and patient with questions. And we have a holistic approach that honors you as an individual, which includes taking your personality, financial, and lifestyle goals into account. And this is really our bread and butter. It's what we believe all clients deserve. So we believe in really getting to know you so that we can best make recommendations and guide you throughout this process. And part of the reason I joined City Chic Real Estate is the amazing team that I'm a part of. At any given time, we have about 15 or so agents, and they're just an amazing resource, not only for me, but for my clients. Because if there's ever a situation that we encounter that I haven't been through, I can almost guarantee that someone on my team has experienced it and can kind of give us some advice from having gone through it firsthand. Working with your City Chic agent. So when you are buying a property, that makes you the buyer. And if you have an agent, they're the buyer's agent. So I provide a professional service just like an accountant or a financial service does. And this includes, but is not limited to, providing guidance and answering your important questions, helping you write a competitive offer that you feel comfortable with, negotiating your offer, home inspection item, and contingencies. And I have a whole slide about contingencies and home inspection items coming up. Recommending reputable lenders, home inspectors, and title companies. We'll talk a little bit more about what each of these professionals on your team will do. I work behind the scenes to reduce the stress of buying a home. There are a lot of moving pieces, and after writing and negotiating your offer, I think this is the third biggest thing that I do for my buyers is if there's something I can do, if there's an appointment that needs to be gone to, if you need to meet a contractor at the property or something like that, there's something I can do, take that off your plate and put it onto mine because it's my full-time job. I enjoy doing that for my clients so that they can hopefully just sign on the dotted line at the closing table. In that same vein, I coordinate all parties involved to make sure we're on the same page. And I do everything possible to make sure you have a successful closing. The buyer agency agreement. This is an agreement between us that we will work exclusively with each other for a set period of time. We will sign it before our first property tour. And so basically, we're just saying that we're going to work together for this particular property. But as you'll see in the next line, you can cancel at any time, no questions asked. You just have to send an email. Why do we need one? It's required by law in order for us to represent you. If we don't have that signed document, technically we're just helping the seller by bringing them a buyer, but there's no one representing your interest in the transaction. And how do buyers agents get paid? So before a listing ever hits the market, the seller and the listing agent, their agent, have an agreement, a listing agreement. And the seller agrees to pay a percentage of the sales price to the listing company for selling their property. So if there's a buyer's agent, they share that commission. So in scenario one, you have no agent. So the listing agent takes whatever the pre-agreed upon percentage is, in this case, 5%. And if you don't have a buyer's agent, you don't get a better deal in any way. You're not saving any money. The listing agent just makes double and doesn't have to do as much work. In scenario 2, you have a buyer's agent. So they split that 5% commission. So 2.5% goes to the listing agent for listing the property for sale, and 2.5% goes to the buyer's agent for bringing the buyer. In both scenarios, you're paying nothing, but in scenario 2, you have someone to help you stay on top of things, help you negotiate, make sure you meet all your deadlines, and do everything like that. So when we work together, it won't just be me. You'll have your entire real estate team. So on your dream team, there will of course be your buyer's agent, me, your realtor. And if you're planning on borrowing any amount of money to purchase your property, you'll need a mortgage lender. We'll definitely work with and discuss home inspections a little bit later, but a home inspector is a really important player on your team. This gives you the best idea of the condition of the property that you're purchasing. For the title company, they are basically, they pay everybody out at the end of the transaction, make sure the money goes where it needs to go. But another really important thing that they do is research on the chain of ownership for the property. So they research all the past owners, how it's been transferred, to make sure that no one's going to come out of the woodworks and claim ownership of the property. And just in case there was something that was impossible to discover that does come up, they'll also assist you in setting up a title insurance policy, which will help protect any claims against the property that weren't discovered. And then finally, your regular insurance company. Like I mentioned earlier, this is a really big investment. It's the biggest investment a lot of people make. So we want to make sure that it's protected. So we're also going to make sure that I'm going to work with your mortgage lender and you to make sure that before we even close on the property, so basically the second that it officially becomes yours, there's insurance on it should the worst happen. Estimated timeframes. This market is very interesting, and I'll continue to talk about that as we go through the presentation. But what we're seeing on average is the home search is taking about 3 to 6 months right now. So that's looking at houses, going to open houses, sometimes writing offers. It just depends. And then once we get that offer accepted and we're under contract and we're getting ready to close, that takes usually 21 to 45 days on average. But it can go much quicker or it could be much longer depending on the particular property that you find. So how do we search for properties? So at City Chic Real Estate, we use an invite-only platform called Real Scout. We like it because it has access to all the homes on the market, and it uses the multiple listing service that all real estate agents use to list their properties. It goes far beyond just bedrooms and bathrooms. It allows you to search for features like natural light, kitchen island, and you can search neighborhood amenities like close to a dog park. So it's much more intuitive, I found, than some of the other websites. And it's also just, I think, very user-friendly. So if you want an invite, it's free. Just let me know. Financing your home. I am not a mortgage lender, but to give you an idea of what the process is, I guess I'll start with why go ahead and work with a lender or a bank to figure it out first. And the reason that we recommend working with them first is that you can establish a concrete price range now so that you can avoid heartbreak later. Especially in this market with ever-changing interest rates, it really does affect how much of a home you can afford and what you'll be pre-approved for. So we need to know how much you're approved for now, and then how much that could fluctuate depending on interest rates. So what do you look for when you're thinking about who should finance your home? Well, one of the biggest things, of course, is comparing apples to apples. So how much is this loan going to cost you? And interest rates are a big part of that, but you're also looking at how much the fees are. Those two things are going to be the biggest things that differ between a lot of estimates. So that's what you're going to be looking at. But also, how responsive is the person that you're working with? Do they respond 7 days a week? Do they respond if you email after 5 p.m.? Real estate often happens outside of these times. So it's really important that the lender that you're working with be available and flexible to be responsive during those times as well. It also has to be a good fit personality wise. When you're using this much money or spending this much money, you need to feel comfortable asking questions. You need to understand every component of it. So you want to make sure that the person that you're working with is just someone that you feel comfortable asking questions to, and that they respond to your questions and answer your questions in a way that makes you feel comfortable, that you understand, and that it should put you at ease. You should feel good about who you're working with and feel good about taking out this mortgage. Having a good reputation in our market is very important when going to make an offer. The DMV is very small. And so having a lender who has a reputation about getting to the closing table can really make your offer just that much more competitive in this market. It's not always about the lowest rate. It's about getting to closing. So that sentence perfectly kind of sums up how I feel about lenders. It's ultimately whoever's going to get you to closing, whoever is going to get you the best deal that you feel comfortable with. That's what we'll go with. That's who we'll go with. But I also have a list of amazing lenders who I know will take great care of you that I can share with you as well. What documents are needed? So basically, I always say it's kind of similar to like doing your taxes or anytime you have to do anything with like the government, it's like your passport, kind of a combination of those two. So you'll need proof of income. So it can be your last 2 pay stubs, your W-2 from the previous year, or your tax returns if self-employed. You'll also need to supply bank statements for the last 60 days. And this is going to be so that they can make sure that you have funds for your down payment and your closing costs for the loan. They will also need a copy of your driver's license so that they can verify verify who you are. Employer information so that they can verify that you're still actively employed and with currently no plans of changing. And your residence history. And then you'll scan everything to a PDF and just keep that in a file so that it's ready to go when the lender asks you for it. So what is in a monthly payment? There are a few different things that go into this number that you're going to get. So when you work with a lender, not only are they going to tell you you're blanketly approved to spend X number of dollars on your house, but they're also going to give you an idea of what each monthly payment would be like at different numbers within that pre-approval number. So when they're looking at that, they're combining the principal. So this is the amount that you're actually paying off towards what you borrowed. It includes interest, which is the fee that you're paying to the institution that you're borrowing the money from. Property taxes go to your local jurisdiction, usually your state and county. Insurance, of course, and insurance is required by the mortgage lender or the institution that you're borrowing it from, because should a natural disaster happen or the house just falls down, it needs to be repaired so that should you default on your loan, they can sell it. So you're required to have insurance on the property for as long as you have the mortgage. So that's included in your monthly payment. And then if you buy a condominium, a cooperative, or a property in a homeowners association, then that is also included in your monthly payment. The impact of higher rates. Interest rates, especially for first-time home buyers, have been a big topic of conversation. And right now they're just on the rise, and it seems like it's going to be that way. Fortunately, they still, relative to history, are pretty low. In the 80s, we had 15, 16% mortgage loans or mortgage rates. So relatively 5% is still low, or around 5% is still low, but it does really have an effect on your monthly payment. So for example, a 3% interest rate on a $300,000 loan works out to a monthly payment of about $1,265 versus a 5% interest rate on that same $300,000 loan gives you a monthly payment of $1,610. So a big difference. And this slide is not at all intended to scare you, but just to say, like, if you're thinking about, should I buy now or should I wait a few months? Interest rates are forecasted to not shoot up, but they are forecasted to continue rising. So it's a good idea if you're vacillating between now or in a little bit, think about how interest rates are going to factor into your monthly payment. And also consider that prices are forecasted to continue to rise, not as quickly as we have been seeing in the past couple of years, but they're not predicted to fall anytime soon. So with slight increases in prices and increasing interest rates, if you can buy sooner, I would recommend it. But at the same time, interest rates can't dictate when you buy. It's just a factor in when you buy. So just something to keep in mind. And I can definitely have a conversation one-on-one about when is the right time. Is it the right time? Should I wait? That's a big part of my job, especially right now with first-time home buyers. It's important to make sure that you're ready for this monthly payment and that you feel comfortable, that you understand that there are other requirements of owning a home. So happy to have that conversation with you one-on-one. Now that we've talked about spending money, there are also ways that purchasing a home and owning a home can save you money. So two of the biggest ways that you can save money is by deducting your mortgage interest and also your property taxes. So itemization can be a really good thing when you've purchased a home. For example, for this $300,000 mortgage with a 4.5% interest rate, they had a tax savings of $4,200. So just some things to think about. Definitely want to talk to your accountant, but also your mortgage lender can help determine if you qualify for any additional tax breaks and tax benefits. And these are just a few more tips for thinking about financing your purchase. Rate locking. Rates change on a daily basis. And once you're under contract, you can lock in your interest rates. That's the traditional way of doing it. And when you do it that way, your rate lock is good for 30 to 45 days so that you can have that rate until it's locked in officially at closing. A lot of mortgage lenders that I work with now are offering that, like, if you're actively searching and actively offering on a house, so it seems like you're going to go under contract and close relatively soon, you can pay up front to lock in your interest rate. So that's something that loan officers are doing right now. Just especially if you're thinking about buying definitely like in the next 60 days, then let's lock in the rate now because it'll probably go up within 2 months. Loan estimate versus loan settlement. So a loan estimate is just that. It's an estimate based on what property you think you're going to buy, versus the settlement statement is we're buying the specific property and here are the exact numbers of what you are paying, who it's going to. And most importantly, it's also going to tell you the exact number that you need to bring for your closing cost so that you can close on your property. Your first mortgage payment skips a month. So in those closing costs, they're going to include your first mortgage payment. So for example, if we were to close on a property tomorrow on the 21st, your closing costs would include all of your mortgage for the month of April, for the remaining days of April. It would include the entire month of May, and then your first mortgage payment would be June 1st. And then just something to keep in mind, don't change your credit or job situation without communicating it to the lender. So try to not have any additional credit pulls or anything like that, or changes in the amount of credit that you have taken out while you're under contract and while you're getting financing. And then also, if your job situation is forecasted to change, please communicate this in advance with your lender. They understand that things happen, but they just need for underwriting to know that it's coming up and make sure that things are falling within the right timing to make sure everything's good. But if you can, just avoid changing your credit or job situation while you're looking for a house. But if you have to, communicate it in advance with your lender. So this is a quick summation of the mortgage approval process. So this is the steps that the mortgage lender and their team will undertake for you once we found the property and you got your offer accepted. So you'll provide documentation again. So even if you just did your pre-approval like a week before you found the house, you will provide documentation to the lender showing your income and assets. And this is also when they will re-verify your employment and credit history. They will send the appraiser out because the appraisal is for the bank to make a valuation of the home to make sure that it's worth the amount that you're borrowing. So it determines the market value of the property and ensures the property is worth what you're paying for it. With underwriting, this is really just the double checking phase. So the underwriter reviews all of your documentation, the property appraisal and sales contract to make sure that you qualify for your loan and that they have everything that they need and that they've double and triple checked it. And then if they have any final conditions, which are super common, even if it's just we want a credit refresh before because it's the beginning of the month or the end of the month, or sometimes they just want to re-verify employment. It could be a lot of things. It could be a big thing, but it's just really important that we all work together to make sure that these get taken care of so that you can close on your property. These are some potential out-of-pocket expenses that you can expect while you're purchasing a home. So there are mortgage upfront fees. So when they do that hard pull of your credit when you're under contract, you'll pay for that for them. So that'll be between $20 and $30. And you'll also pay for the appraisal for the bank because you're the one taking out this loan. So that is between $400 and $500. Home inspections, these vary completely depending on what kind of property. Is it new construction? Was it built 10 years ago? Was it built 20 years ago? Was it built 100 years ago? Has it been renovated? To what level has it been renovated? We really will discuss these depending on the property that you find. A general home inspection runs between $300 and $1,000. And this is what I recommend for for any property. For any property, the general home inspection will cover Peaches items, which is plumbing, electric, air conditioning, heating, and structure of the property. That will be covered. You'll get a full official report. It's usually about 30 pages, even for the best of properties. They usually have a couple things wrong with them. And also the home inspection is to help you know how to use your home, how to winterize it, what you need to do in different seasons. So definitely recommend that for everyone. The others really depend on the property. Lead paint inspections are only necessary in properties that were built before 1978. And even then, if you suspect there's lead paint and you have a reason to be really nervous about someone who might accidentally or intentionally, if they're really young or something, ingest the lead paint. Encapsulation, which is the remediation for lead paint, is sometimes just as expensive as the testing itself. So just rather be safe than sorry, just go ahead and get it remediated. But if you want to do the lead paint inspection, it's $500 and up. So that $500 usually gets you 1 or 2 sample spots, but you have to test each different type of paint or each different source of potential lead in the home. So that can be quite expensive. Radon is a natural gas that leaches up from the Earth's surface when we dig for basements or parking structures or things like that. Luckily, in this part of the country, we're not a particular hotspot, but there are some areas where radon has been detected at unhealthy levels around like the Rock Creek Park area. So we'll definitely work together to determine if this is a test that you need for your particular property. A mold inspection is as needed. Usually I do a mold inspection if we see signs of moisture. We are smelling kind of like a mildewy smell in the air when we're touring before we make an offer. Or if during our general home inspection, the inspector is noting signs of moisture, we can usually get them to allow us to do a mold inspection. And then finally, a termite inspection. Largely, DC is a brick city, but there are 100% wood components in our home. So termites are still a possibility here. Not super common, but again, the general inspector can be a great asset to us if they're seeing signs when they get into crawl spaces or basements or things like that of termites. And they only cost $50 to $60. So if they're going to make you feel better, we can absolutely do one. Closing costs will run you about 3 to 4% of the sales price, and your lender will give you a close estimate. Sometimes especially these days, they're really close to hitting that number almost exactly. So in terms of touring properties at City Chic Real Estate, we tour properties by appointment. That's just how our multiple listing service with other realtors works. I'm available for tours 6 days a week. I take 1 day off a week for myself. Other than that, I need about 24 hours notice, if possible, just to get into the property. Oftentimes it might be seller occupied or tenant occupied, so we'll have to coordinate with another person to actually be there. And even if not, we need to coordinate so that we're the only group there so that we can have adequate time in the property. I'll provide you with copies of the listing. All you have to bring is yourself. So you found it and you're ready to make an offer. So what are the things that we need? So the 3 big things are your earnest money deposit. Your earnest money deposit is a show of good faith that you plan to execute this contract fully. So it's money that's held by the title company that is then credited towards your closing costs and your down payment that you owe once we get to closing. And we use contingencies in the contract that I write for you that we'll talk about in just a second, actually next. that protect this so that you can get it back if you cancel within the terms of the contract. You'll need your mortgage lender letter. This is just your pre-approval letter, which says we have preliminarily evaluated this person's finances and they appear to qualify for this amount of money to purchase this home. And then the sales contract, which is basically, it's not fill in the blank, but it's a document that has to be written so that it specifically represents the terms that you would like to purchase your property. So it'll have your sales price, what type of loan you're using, and then most importantly, we'll work together to decide which of the contingencies you'd like to include. So there are a number of contingencies that help you protect your deposit, help protect you in purchasing this property. But these are the four most common that especially first-time home buyers usually use. So we use a home inspection contingency. So we already talked about Peach's items. The home inspector will go in, inspect what they can see, and give you a report. Now, when we write the sales contract, we have the option to not do an inspection, which, excuse me, I never recommend that. You can do an inspection with the right to negotiate with the seller. So say, okay, we know that it needs a new roof. Will you give us $5,000 or whatever number you decide towards that? You have the right to cancel, or you can do both. So you can do home inspection right to cancel and the right to negotiate, or you can do either one of those. Alternatively, you can just do a home inspection with for informative purposes is what we call it. So you're not going to cancel, you're not going to negotiate, but just so you know what you're getting into, that can be a really, really competitive home inspection contingency for you. So we're still doing it, but the seller knows that you're not going to nickel and dime them and that you're not going to cancel the contract based on the home inspection. The appraisal contingency gives the bank time to send the appraiser out. We get this number back. And then should it come back low, you either have the right to negotiate with the seller or you have the right to cancel the contract. The financing contingency says that if by no fault of your own, meaning you didn't quit your job, you didn't go out and get a job that you make significantly less at, if by no fault of your own, you don't qualify for the mortgage, then you're not expected to come up with hundreds of thousands of dollars to execute this loan and that you're legally able to cancel the contract and get your earnest money deposit back. And then the one that is the best, so if you're buying a condominium, a cooperative, or in a homeowners association, you have the right to review all of their documents. There are mandatory bylaw rules that you are required to follow when you live in one of these developments. And so you get to review their finances, any rules that you'll have to follow, potential lease rules in the future, things like that, even pet rules, parking, utilities. You get all that information. You and I will review it together. It's actually one of my favorite parts, just because I think you learn a lot about the condo association that you're joining. And then depending on where you're buying between DC, Maryland, and Virginia, you get a certain amount of time and we'll review it. And then if you don't like anything about what's in there, you can cancel the contract and get your earnest money deposit back. So in multiple offer situations, just to connect that back to contingencies, we might have to talk about waiving some of these, but I never like to think about waiving them until we know we're in a competitive situation. And so when we are in a competitive situation, like a multiple offer situation, we'll talk through it. We'll go through each one of these for this particular property, and we'll talk about what makes sense for you and what you feel comfortable with. But in multiple offer situations, they do move quickly. We have time to write our offer, but in terms of negotiations, once the offer deadline has been set and the seller is ready to make their decision, it goes boom, 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 quick. So one of the things we'll do, or we'll discuss doing, is including an escalation clause. So that's when you think it might escalate, but we're not sure. So we can start at a price and then go up to a certain price maximum without them having to call us and us having to re-sign paperwork each and every time. And then I've mentioned this before, but use a preferred lender to get pre-approved or to get fully approved. So that's something we can do too if you've lost out on one, or if you don't want to lose out on one, you want to be competitive from the get-go. Mortgage lenders, especially the ones that I work with, are able to fully pre-approve you. So all you have to do is find the property and you can have a really fast, simple close. A few other things to think about before settlement. You are required by your mortgage lender to get homeowners or condo insurance in place within 7 days of getting your offer accepted. We recommend getting quotes from 3 companies, including whoever you have car insurance or you currently have renter's insurance with. Usually they're willing to give you some sort of discount for loyalty or bundling your policies. And what you'll do once you get this policy in place is you'll provide the information to the lender and the title company, and then they'll double check that the policy that you've selected has adequate coverage. You'll set up utilities. A lot of condos have utilities included, so I'll help you figure out what you need to set up. We will do a pre-settlement inspection and walkthrough. We'll make sure that nothing's been damaged since the last time that we were there during the inspection and that everything is just generally in the same condition. We'll review your closing disclosure, which is the same as the settlement statement that we talked about. That will be the final number that you need to bring to the closing table for your closing costs, and it will also be the total that you're paying for the home. And then you'll prepare your funds to close, and this will need to be a certified check or wired directly to the title company. 9 times out of 10, the title company will require you to wire it, so we'll go through all of that then. But to wrap up this process, you get pre-approved. We work together to find your dream home. You'll make an offer. We'll get updated paperwork to the lender. We'll conduct the home inspection. The appraiser will do their report. You'll work to set up insurance. We'll get final loan approval. You'll set up utilities, attend the final walkthrough, review the settlement statement, prepare funds to close, go to closing, and then you'll enjoy your new home. Congratulations. You've just taken a step closer to becoming a homeowner. So I am going to follow up, make sure everybody who wants the invitation to Real Scout, our invitation only platform, has it. And please feel free to reach out if you would like to have a one-on-one conversation. I'd love to get to know you and what you're looking for and how I can be of help. I hope y'all have a great day.